Alright everyone, welcome back to the channel. So in this video I've got 3 interesting Bitcoin charts that I do want to go through, as I did not upload yesterday and we haven't checked out Bitcoin for a small period of time. So let's check out what is going on in the charts today. Now first of all, I'm going to start off with this chart, keeping it nice and simple. You can actually see that we are in a huge falling wedge right now. Depending on how far we fall down into this could go on for an extended period of time. But hopping over to the daily, I do find it kind of worrying how we are pretty much lollygagging at this region, considering how previously we came down, got a huge bounce, came down, got a huge bounce, and we were out of here, you know, the other 2 times. But, you know, at this moment in time, we're really just kind of lollygagging and doing a whole lot of nothing. So bear in mind, if we do break below this, it could be absolutely crippling for the Bitcoin and the altcoin market, and I do think we are going to capitulate a tiny bit further at some point very soon. But I'm going to be showing you an interesting chart in just a moment that does disagree with that. Before we do that, we are going to check out the dollar, see how it has been doing since our past couple of videos. Weekly time frame, obviously it's super bullish right now. The fact that this is a weekly candle above, literally kind of just sitting above where we've been rejected before, this is not what you want to see. Sorry, this is not volume, this is the squeeze bomb. This is kind of showing the momentum in the market, and you know, you don't need to see the momentum in the market to just look at the chart and realize that we are exceptionally bullish for the US dollar right now. It does not look good for crypto when you've got the US dollar looking this strong. On the daily time frame, we took a couple of days off. We took a 3-day breather on the dollar, came back down to your EMA ribbons, and then we are now pushing up very strongly back up to that previous all-time high. If we do push above that kind of 103.9 region, especially moving up to 104, then once again we would be, you know, in price discovery in local terms above these previous triple top patterns. The all-time high is actually miles back in this direction. I wasn't even born when the dollar was making all-time highs, but it was absolutely ages away. So ages ago rather. Now let's check out the Bitcoin Fear and Greed Index, because we pointed this out before as well. You know, previously we always bottom around these kind of 10, 11. Down here we came down to 9, and most recently as well we came all the way down to 9. We've had a tiny bit of confidence re-enter the market, but we are sitting at 9 once again. And this Fear and Greed Index chart in itself, along with this chart that this one here that I'm about to show you in a moment, does predict that the bottom is already in / is literally around the corner. But in this chart it is slightly different, so we're going to run through both. Like I said, not an awful lot to talk about over on the Bitcoin falling wedge chart. It is just a very macro pattern to definitely keep our eyes on. And if we look at this on the daily time frame, you can see today and tomorrow we really want to hold 29,100. If tomorrow, you know, we're putting in closes at / below 29,000, then we would have unfortunately broken below this. You can see coming in tomorrow the trend line would be 29,074. The next day after that it would be, you know, 29,030. Day after that, 21st, would be below 29,000. So on Sunday, that's the 22nd, we would need to really hold it on Sunday. So as long as we hold 28,950, it would be okay. So keep an eye on 29. Doesn't have to be an exact figure, but a big move below 29 is not going to look good for Bitcoin whatsoever. It'd mean we'd be coming back down to this low at 25,000 and probably pushing down a little bit further. And that's what we're going to talk about in this chart before we do head over to this chart, which potentially already calls that the bottom is in. So bear in mind, these cycles, they're not playing out to the exact teeth, but we're seeing a lot of similarities. For example, number one, you can see this triangle pattern, this descending triangle pattern after your blow off top up here. These are playing out to the exact teeth. The only thing that isn't, you know, necessarily playing out exactly is the fact that, you know, you've got these 2 trend lines down here, whereas in this time we've got the two trend lines here, and one of these trend lines is actually the triangle pattern, whereas previously it was the triangle pattern breakdown into these kind of two trend lines that held us up. So there is some very, very slight differences, but there is a lot of similarities going on with the two of these patterns. And looking at what happened before, you know, that weekly close below fully solidified the breakdown. I mean, we did not even have a bounce after we had the weekly close below the trend line. So like I said, 28,950. If we do landslide below there, and this chart is basically calling the same number, 28,800, 29,000. It's not as specific on this one because I've got a huge trend line just so you can see, but it would be lining up with that 29,000 like we had before. So this trend line, or this chart rather, historically we've always come back to the 200-week moving average. So on this chart alone, it would make sense. The trend is your friend. We came back here in 2015, we came back here in 2018, in 2020. This is very interesting. We actually came down to the purple line, but what's interesting about this is we came up after we came down to the orange line. So when we did come down to the purple line, it was actually a higher high from here. But what I want you to notice is that we've got, you know, a breakdown from a triangle pattern, one huge low, a big move up, a fake out, and then a big move back to the downside. That double bottom is really what I'm kind of looking for at this moment in time. And you can zoom out and you can see this is not the first time that we've done something like this. We've done this many times. You know, even in this kind of market cycle, we moved down, you had one bottom, you kind of started to move up in a bullish trend, and then you came back down, double bottom, and it really wasn't done until the double bottom was done. And this is kind of what I want to highlight. You know, the bottom could already be in, but in my opinion, we could have a bit further to move to the downside. I'm personally targeting the 200-week moving average. I don't think we'd be going as low as the previous all-time high, round about that 20,000 low or high end 19,000. But it could definitely happen, especially considering the amount of bearish volume that we have going on at this moment in time. Tomorrow I'm going to be checking out the weekly, monthly and 2 weekly Heikenashis for Bitcoin, so we will see what the Heikenashis are looking like. I can almost guarantee that we are going to be still in that steep down movement to the downside, but what we will be doing is we will be looking at previous cycles and seeing how well the Heikenashis define the bottoms. And you know, after we start switching back over to the green side of things on the Heikenashis, we'll be kind of evaluating if it is a good bottoming signal once you start seeing green Heikenashi candles, which is just something that we're not going to be seeing right now, unfortunately, at this moment in time. We are obviously massively pushing to the downside, so I do expect lower prices. Like I said, I've been talking about this for the past week and a half or so, but I said down here at 34, you know, if we did break down, I'd be expecting like a 35% move down to 22,000. We've already moved down about 14%. I suspect that we have another 25% move to the downside. I'm telling you, if you were not here in the, you know, the 2018 bear market, this is a modest breakdown, because bear in mind this was a very modest breakdown of 45% previously, and this is not as, you know, brutal as what we've seen in previous cycles. So I think we could definitely break down. There's a lot of similarities. I also think the similarities in terms of not necessarily from a charting perspective, but I guess you could draw something. I mean, if we come down to the daily, are we seeing much different? So we kind of had a big trend line. And yeah, I mean, in my opinion, I don't think what is playing out from then, from a technical perspective, is alike to what we're seeing now. But I think from a psychological perspective, the fear, uncertainty, and doubt entering the market at this moment in time is very much like what we saw here. What we saw with the March 2020 pandemic scare was unlike anything that I've ever witnessed in my entire lifetime. This was definitely like a market outlier, and the fear, uncertainty, and doubt was exceptionally bearish at that moment in time, and we're seeing the same thing here. You've got a few other things to add to the mix. For example, you've got a lot of geopolitical news that I'm not going to get into. You've got the war, you have the Fed increasing the interest rate. So bear in mind, at this moment in time, the economy is in a complete space that, you know, we, at least in my lifetime, we've really not kind of seen this type of nasty financial system, apart from if you want to kind of compare it to the 2008 crash. Bitcoin in 2008. Oh, so I think the Bitcoin white paper was completed in 2008. The first transaction was in 2009. So I don't actually think that Bitcoin was around for these times. I think this is the longest time frame we've got on this, and it's 2010, and the first Bitcoin transaction was in 2009 for those pizzas for all that Bitcoin. So it seems like Bitcoin, at least Bitcoin, not the markets, Bitcoin has not really experienced anything like that before, and in the past 2 years we're really witnessing, you know, two of these events back to back. Pairing that with the fact that the fear and greed index is exceptionally bearish right now, kind of sitting around that 9, 10, and, you know, for the past couple of days we moved up a bit between 10, 14, 12, and we're kind of just floating around these bearish levels. But now I want to show you one more chart before we do wrap up the video on a very, very interesting perspective that I just do not see anyone talking about. I made a video called Quantifying Bitcoin, where we looked at Bitcoin against the M2 money supply. We compared Bitcoin's price action to the Nasdaq, we compared it to Tesla, we compared Bitcoin to the SPY, the stock market, we compared it to gold, we compared it to silver, US oil, and also Facebook stock. And this was a very interesting video. I'm not going to go through like all of this or any of this really now. So if you do want that video where you get a different perspective of charting the Bitcoin price against appreciating assets like, you know, Facebook stock or Tesla or gold or silver or oil, when you compare it to these bullish assets, it makes a lot more sense, because in my opinion it doesn't make a plethora of sense to compare Bitcoin, an appreciating asset, to a depreciating asset. It doesn't make a lot of sense. It's like, for example, I've been looking at new gaming PCs. If I want to compare, you know, the gaming PC that I bought, which was like a maxed out Alienware R13, I would want to compare it to something similar, like, you know, a pre-built Asus with like maxed out specs, or I'd compare it to the Asus ROG Strix. I think it's the GA35, like another pretty good PC, not as good as the Alienware, but you know, in theory, you're looking at something that's bullish, or you're looking at something that's like a computer. You want to compare a good computer with a good computer, so it wouldn't make sense if you're comparing, you know, my Alienware R13, which is a fairly new computer, to a, you know, one of the first Macintoshes that Apple ever made. It doesn't make sense to make that comparison. So in my opinion, it doesn't also make a plethora of sense, other than the fact that the US dollar is the world reserve currency. It doesn't make any more sense than that to me, of why we should always chart Bitcoin against the US dollar, which is a depreciating asset. One thing I will say about this is, if we are going to look at Bitcoin against the US dollar, it is very important that we not only look against BTCUSD, but we check out BTC divided by the M2 money supply. And this is what we're going to talk about coming into the end of this video right now. Let's wrap it up with this chart. So number one, why would we compare Bitcoin, or more importantly, why would we get the Bitcoin price and divide it by the M2 money supply? That is the same as BTCUSD. You get the price of Bitcoin divided by the US dollar. It's the same as BTCUSD divided by the M2 money supply. It accounts for inflation. And what you'll notice is, when you don't account for inflation, the all-time high is down here at $20,000 on the BTC-USD chart. When we come over to this chart, which, bear in mind, is an index, it is an index of the BTC-USD price divided by the M2 money supply. So this is a super interesting chart, and what you'll notice is we did not really make too much of a new peak when we went over into the next cycle. In fact, we only went up 1.8%, after we had, you know, this kind of double top structure. And if you compare it to what happened on the BTCUSD chart, not accounting for inflation, not dividing it by the M2 money supply, you can see it actually went up. Oh, that's the wrong tool. It actually went up 7%. So why does one chart say we went up 7% and one chart says we only went up 2%? Well, it's very simple. When you account for the inflation, so when we divide by the M2 money supply, you can see that as we're accounting for inflation, we're actually back at previous all-time high levels, and we're already back at this 200-week moving average when we account for inflation. What does this mean? This simply means the only reason Bitcoin is all the way up here at 29,000 and not down here at 19,000 is because of inflation. Now, in theory, as you can see, you know, the chart is all the way down here at the 200-day, below the previous all-time high. So what this actually means is when you account for inflation, this, you know, what was $19,000 back here is not $19,000 anymore. And you can see that this was from 19,000, the previous all-time high, to where we're at right now, 29,000. As we're looking at BTC on an index, what this means is today's value of Bitcoin being at 29,150 is equivalent to the value that it was in 2017 when we were back at approximately just before the all-time high. So this is very interesting. When we account for inflation, it shows that the price of Bitcoin being at 29,000 is only being held up by the fact that the US has been printing so much money that it's been devaluing, and obviously that's meant that the price of Bitcoin has to go up because they're not printing as much Bitcoin as they are the US dollars. I can tell you that for a fact. And like I said, finishing off with this M2 money supply, historically we really have bottomed between the orange line and the purple line. The orange line being the 200-week moving average, which we bottomed here, we bottomed here, we bottomed here. We really didn't have many weekly moves below this, and we perfectly bottomed here in 2018. We almost perfectly bottomed here in 2020. And I do think, you know, even when we account for inflation, that we probably are going to come down a little bit lower. We could potentially even come down to about 87, around this range here. This simply means, you know, 0.87, this is 87% of the original price of the index fund when this was initially made. So whenever this was initially made, I'm not sure, you know, it would mean that we would be slightly down from then, which is interesting that when you do account for inflation, you do get these slightly less bullish rallies, but the charts previously, they look exactly the same. The only difference is the charts are very, very different with what's going on in the short term because of the amount of money the US is printing. So that is all I've got for this video. To summarize, the Bitcoin Fear and Greed Index is at very, very high levels. Pair this with the fact that a lot of these Bitcoin charts are coming down to levels which historically are almost always bottoms. I do think this means the bottom is very, very near. If I had to draw something out, like where I think we could be bottoming, I think, you know, historically, probably it wouldn't be completely out of the question to just extrapolate this bottom. Oh, because it looks like we almost perfectly played this one out. You can see, extrapolate this, slap it over here. You know, we have to resize it a tiny bit, but it wasn't a whole lot different. And I expect carrying over into where we are now, that something like this is going to play out, where the bottom could potentially be in, but in my opinion, this could potentially be the range where we do bottom in. So what does this mean for the next couple of days? It doesn't have to mean anything. It doesn't mean that we can't rally in the next day. It doesn't mean we can't rally in the next week. Coming over to this chart over here, you can potentially see we could even come up to, you know, 34,000 or even 36,000 if we come up to this trend line before one move back down to the downside. BTCUSD looks like it wants to move down to 22,000. BTC against the M2 money supply seems that the bottom is either already in, or we could have one quick weekly capitulation wick all the way down to the 300-week moving average. And if we did that on the USD chart, because we had a price target over here, if we did break down to the 200-day and we said that this would be about a 25% move, if we extrapolate where we are now all the way down to the purple line, and bear in mind when I say this, I think if we're going to come down to this purple line, it's going to be something like this. We're going to try and hold this box, and we're going to wick, and it's going to be done. That is going to be the bottom. We're probably going to lollygag, do something like this for the next couple of months, and then I imagine 34,000, boom, do what we normally do, maybe retest the all-time high 19,000 one more time, and then we'll be out of this accumulation range, out of the bear market. Why do I think we're going to do something like this? Because we've done something like this every single time. You can see here, lollygag, boom, boom, done. Why do I think that we're going to have one bottom followed up by an accumulation range and then another bottom coming into the next couple of months? Very, very simply, what do we do here? We fell out of this triangle. What are we doing now? We fell out of this triangle. What do we do after that? We came and had a big push. We had a big jump up, and then we double bottom. That is why I think we're going to do pretty much what we did. Not, you know, to the teeth, but I think it's very obvious that we do this again and again and again. And until you have that huge confirmed double bottom, it does seem like the price action for Bitcoin is probably going to be more likely to move to the downside. So that is all I've got. I don't actually think that we're going to be moving down to 16,000. If we do, I imagine it's going to be a wick like that is going to be bought up. If you're asleep, you're not going to be getting your orders filled for it. And I think even people who have their orders filled for, you know, 16,000 probably won't get them hit. I do definitely think though that 22,000 could be on the table, so that is really what I'm looking out for at this moment in time. That's all I've got for Bitcoin. Very interesting to note as well, like I said, that when you do account for inflation, you know, by dividing this by the M2 money supply, we're already pretty much at these levels where the historic bottom could be in. Like I said, it's very hard to quantify this and know what's going on when we've got geopolitical news, fear, uncertainty and doubt, the Fed increasing the interest rates, the economy landsliding. These are all things that Bitcoin has not necessarily lived through before. So we are in kind of uncharted waters. Bear in mind, we've seen plenty of fear, uncertainty and doubt, but all the other things I mentioned, these are kind of new in the scale of Bitcoin. So that is all I've got for Bitcoin today. Hope you enjoyed the video. As always, cowboy out. Peace.